Today was a great day for tech investors as we can see the Qs were up over 3%. If you're a semiconductor investor like myself, we can see the ETF iShares Semiconductor ticker SOXX was also up over 4.7% today. So on today's episode, I want to take a closer look at four kind of popular semiconductor stocks: Nvidia, AMD, Qualcomm, and Texas Instrument. Even though I don't own Texas Instrument, a good friend that I follow, Stock Market Investment, talks highly about it, so I wanted to add it on the list for today. So for today's episode, I want to take a closer look at the future growth expectations for the next quarter and also take a closer look at some valuation metrics. So let's get started.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
Unfortunately, we can see all four stocks are down pretty high from their all-time highs except Texas Instrument. We can see Nvidia's leading the pack down over 60%. AMD is not far behind, down roughly 58%. Qualcomm is down roughly 35%, and we can see Texas Instrument is down roughly 18% from its yearly high. Like I mentioned, today was great. Nvidia ended the day up 5%. We can see Qualcomm up over 4%. AMD was up over 2%, and we can see Texas Instrument was also up over 3%. If we take a closer look at Nvidia, I do want to say one of the major reasons this one's probably up the most is this is the one that has been the most volatile recently, with a lot of kind of headwinds kind of hitting it, which has caused the price to drop dramatically. So I want to say with high volatility on the downside, you also see high volatility on the upside. So first, I want to take a closer look at historical revenue growth. If we take a closer look at the most recent quarters, all companies except Nvidia, which is seeing numerous headwinds, grew dramatically. AMD grew 70% in their most recent quarter, but remember, they recently did make an acquisition which did boost that revenue growth. Qualcomm has grown 35.7%, one of my favorites, and we can see Texas Instrument up over 13.8%. And remember, this is one of those slow companies, but a company growing double digits, and we can see historically revenue hasn't really declined much, so that's what you want to see, right? Some steady revenue growth. Now, if we take a closer look at revenue growth estimates for the upcoming quarter, we can see Nvidia is the one that's expected to see a huge revenue decline of around 17% year over year. Again, this is the one that's also down the most. If we take a closer look, Texas Instrument is expected to grow roughly 10.6%. Like we saw, Texas has been growing in those 10 digits, so 10.7% still looks amazing for the overall growth. We can see Qualcomm is expected a 22% year over year growth, and Advanced Micro Device is expecting a 55% year over year growth. Remember, they are seeing growth for sure, but a good portion is also due to the acquisition, which is help boosting that overall revenue growth. At the end of the day, I do want to say Nvidia, out of all of these, is probably the one that has the most headwinds affecting it right now. And if things get ugly, which it can, this can also see the biggest stock price. I do want to say though, at the end of the day, all four stocks do have huge potential to be huge winners in the upcoming 5 years. If you are enjoying the episode, make sure to hit the thumbs up as it does help me grow my overall audience. If you want to support a little bit more, make sure to subscribe using my link at fool.com/Jose. Finally, if you want to learn more about the semiconductor market, make sure to sign up for my newsletter. The link is down below. So next, I want to take a closer look at valuation metrics. But when I look at valuation metrics, it might be different than how others might look at it, right? I'm not looking for a certain number. I'm more just looking at comparing it to historical levels for that same company. For example, for Nvidia, if we take a closer look at EV to EBITDA forward ratio, is currently sitting at about 49. I do want to say for Nvidia, this is still kind of a bit elevated compared to historical levels. So this might tell me in the short term, Nvidia might not be sitting at attractive levels. Again, this is only looking at the next year. So for me, Nvidia is one of those companies that I believe in the next 5 years will be a great winner, but maybe not one that many investors might be excited to invest right now. I do want to say one of my favorite opportunities right now in the market, if we just take a closer look at valuations, is probably AMD. Forward ratio is 11.3, and this is one of the lowest it's been compared to its historical values. And this is a new company with a new acquisition, hitting new solutions, and becoming a leader and continuing to grab market share from the likes of Intel. So I do want to say AMD is looking very attractive for me. Another one that's looking super attractive in my eyes is Qualcomm. We can see forward ratio is 7.2. Again, lower compared to its kind of historical values in the past 5 years. So again, this is a company that's expected to grow dramatically as they're focusing in Internet of Things in the automotive market. So I do believe this one is also a great opportunity. Texas Instrument is another one sitting at around 12.65 when we take a closer look at those forward ratios. It's again sitting near those historical lows for the past 5 years. Like I said, I don't invest in Texas, but looking at these valuations, it does look pretty attractive. But for me, I do want to say AMD and Qualcomm for the technology that I know and where I believe technology will be in the next 5 years. These two are looking super attractive. I do want to say Nvidia in forms of the next year might not look that attractive, but I do believe the technology that this company is providing is something that can make this a dramatic winner in the 5-year time span. So that's why for me, Nvidia probably has the most risk, but also in my opinion has the potential of providing the most reward. At the same time, those other 3 companies that we looked at, I do believe have the potential of providing great rewards to investors. So let me know in the comments below, are you thinking of purchasing any of these 4 stocks? If so, let me know which ones and why. So take care, have a good day, and see you next time.